Okay, guys, today we're going to walk through the changes ULTY made back in March of 2025. To be honest with you, for this ETF, I'm on the fence with it. It's a yield max product. I'm on the fence with these products. The dividend rate, about 88% annually, is intriguing. Some of the changes they've made are intriguing, so we're going to look into it and just evaluate if it's a viable long-term ETF strategy. Okay, guys, one of the first major changes ULTY made back in, I believe, March of 2025 was they adjusted from a monthly distribution to a weekly distribution. They found it to be a much more attractive strategy for income-seeking individuals. So you can see that back in 2024, every month they were paying out $1 a share, $1.40 a share, et cetera, et cetera. And then coming into March of 2025, they shifted to about 10 cents a share every week. So that's going to provide you weekly income. And if that's something you're intrigued by and something you want, then this is an interesting product in that respect, because you're going to be getting paid out weekly and sizably. I think about 8 to 10 cents a share, which is quite strong. The next adjustment that they made was adjusting their expense ratio, the MER. Originally, it was I believe it was 1.4%, and they do have a fee waiver right now for 0.1% off. So that's interesting. So you're getting a little more of a discount there. And I mean, we're talking about a fund that is delivering, 88% to 90% annually. So, 1.3%. It's a marginal payment for that type of structure, but I think it is quite a high MER anyways, like in general, compared to just any other covered call fund. Yield max above is generally above 1%, and that isn't so attractive overall. But again, you have an 88% yield, 1.4%, 1.3%, not that big of a deal. Okay. The next big adjustment is they went from holding just synthetic positions to the actual underlying positions, within kind of like this high risk portfolio. So they've purchased Coinbase, AppLovin, Oklo, Rocket Lab, Upstart, MicroStrategy, Mara, Reddit, Hood. You can see a very tech-focused structure to it. Um, and they've implemented with this new asset structure, they've implemented credit call spreads that will generate that monthly and rather weekly income that we're all seeking. In addition, to protect downside, they have added in put options. Okay, they've added puts for downside protection. These are out of the money puts that you can see in here, rather here. And these will mitigate the losses when the individual stocks will drop sharply, and they help with that NAV stability. And that's really what we're looking for is NAV stability. Before we look at, the course of this fund, it's down 71% from its inception. But since its change back in March, it's actually somewhat grown in terms of NAV. Um, you can check that out right now. Like, if we look at March, it's been pretty stable. It's more stable than it was, prior to when they had the other strategy with the synthetic calls, that just dropped like a rock, really. Now we're somewhat more stable, but still seeing a decline in NAV. So we want to monitor that and look at that. So really the overall effect from this situation is with this new structure, you're going to get weekly payouts. You're going to get the NAV is going to be more stable over time. And it's still going to drop, but it's going to be more stable. We're going to see a lower distribution rate. First, like the 130%, now it's 88% distribution rate, but you're going to get that weekly income. So it is an interesting strategy. Firstly, you have to, be bullish on some of the underlying assets. So that's like a number one as well. Like, are you bullish on some of these assets? Personally, I think Coinbase is an interesting one. 11. MicroStrategy, Mara, Reddit. It's kind of a mishmash, a hodgepodge of higher risk and tech. But they do have kind of a, yeah, a tech focused, a crypto focused repository here. So that's something that you guys have to judge is, are you open to the potential NAV decay that will happen, that will continue to happen, um, for the benefit of that weekly payout and the high dividend rate? If that's something that is attractive to you, then this fund could be strong. Looking at the fund from a total return standpoint year to date, it's done 14% total return year to date, which is strong, beating QQQI. But is that going to maintain, or are you just going to be returning your capital and then next year it's going to really struggle? It's very TBD. I do like the changes they've made that mitigate the downside, the downside weight and the downside pressure using those puts. But it's just too complex of a strategy with all the different adjustments they've made and seeking that weekly income. Is it better off? Are you better off looking at a QQQI or a Schwab product or a JP Morgan product? That's for you to decide. But want to just break down some of the quick changes that ULT has made, YieldMax has made, and yeah, let me know if you have any questions. Okay, guys, are you invested in ULTY? Please let me know in the comments below. Also, if you want financial coaching, I do one-on-one coaching. Just sign up to the Patreon and let's rock with it. Outside of that, guys, please subscribe. All the best and cheers.